Welcome this week's webinar training, live training here for our partners. Hiram here with Credit Suite. I'm one of their senior account managers here, and we will be bringing Craig here this week on board here again. He's one of our senior finance guys. We'll be going into the details of business financing, business loans. And obviously here we're going to touch on partner resources and how you can utilize them. We're also going to discuss a little bit on processing and and how they handle things, and then go into the details of marketing and making this side of the business grow even more exponentially, the way we want it to be. This is a tremendous revenue stream for your business. If you haven't figured out yet that every person that you talk to that's in business, the first thing they ask you is, well, can you get me money? Can you get me funding, and how quick? We want to make sure that we can decode everything that we do. We provide you all this information so that you can utilize it and watch how the revenue will continue to come in, and repeat referral business, that's super important here for the type of business you're in or industry that you're in. So welcome again, Craig. Thank you for being with us. You have a little bit of the floor again. For those that weren't here last week, I just give the open floor to Craig and introduce himself again to you. Craig.
Hi guys, hope all is well. Happy Tuesday. Just like Hiram was saying, we're going to be covering a couple of different things. We're going to be going back and forth from the client dashboard, client profile, talk about a little bit of what the processing department does, the handover from finance officer to processing when it comes to a file, especially if it's a more complicated file, and then we're going to shut it down and start doing a Q&A so we can make sure that we can answer specific questions for whoever has them. So
Perfect. Thank you so much. So one of the things that I do want to open up this week is funding, right? What is funding? What is the finance department? Why does Credit Suite have a finance department that is humming, that is truly bringing out some loans and making some things happen that your local banks or your local lenders and lending institutions are not bringing forth? And what makes us different than the rest, right? So I want to cover again very briefly. I don't want to repeat word by word like we did last week, but I just want to kind of, the ones that weren't here last week, I kind of want to let you know, listen, we're doing some really great things out there. We have a tremendous network of lenders, a tremendous advanced system here in place, the processes that we have in place to streamline these loans. If somebody's coming over to you and saying, listen, I need funding, 100 grand, 300 grand, half $500,000, how quick can you get them? Obviously, urgency is very important, and we know that time kills deals. And we don't want these files lingering on for months and months and months, or even weeks, or even days, when we know that we can get those closed pretty and fairly quickly. Very briefly here, Craig, just touch a little bit on what types of loans we're putting out there. What's the most popular ones? What are some of the difficult ones? Because I was standing next to your finance guy here this morning in the cooling station over there, water cooling station, and I'm hearing some tremendous thing like 472 credit scores, getting approved for some serious cash. So can you elaborate a little bit of some of the programs that you guys have out there? What you guys are really doing here that you're knocking out of the park?
Sure will. What we do, and just so everybody's aware, just like we do on the business credit side, we're always refining and trying to approve or improve our products and services that we provide, but not only that, the affiliations of lenders that we bring to the table. So we literally, there's a department that has their only job on the earth is to bring us, and so we can vet and expand what we can offer to our clients. So we're constantly vetting investors, venture capitalists, new banks with new products. We're always refining and trying to get ahead of the market when it comes to what we can offer, because a lot of these funds will either dry up rather quickly, or it'll catch on fire and then everybody will start doing it, and then you're back with the pack. So we're always trying to stay innovative and ahead of the pack when it comes to the different types of fundings that are out there. And just like Hiram was saying, I mean, you know, credit can be overcome with cash. You know, if you're not making any money and you got a 472, then I mean that's enough to be said about that. But we're able to get fundings now with sub 500s, depending on revenues of businesses, cash influx. What we can do on the revenue side is expanding on that. Also, collateralization of properties, refi, cash out refis. We can go all the way down to 500s now. So it's always constantly growing. And now we're getting into a new phase, or a new glitch, if you will, in the revenue world. And for those of you that don't know, the revenue financing and merchant cash advance is generally a high interest, low doc, short-term cash infusion loan for a business.
Hmm.
And what I mean by high interest, it can get high. It can get all the way up to 50% in some instances, which is, those are loans that you either got to take those, or you're going to close your door option. You're going to close your business down. That would be the only time that I would ever recommend that type of a loan at that interest rate. But we do get a lot of those down to 19%. A lot of people don't know that because they've heard of revenue loans or MCAs before, and they're like, oh, those things are crazy. Well, there's some in there that are low doc loans that would fit somebody, let's say that's A paper, but they don't have A paper documents, meaning that they have a tax lien, or they've got some kind of history, personal history, as far as the background checks. There's a whole bunch of things that would prevent them from A paper, but would get them the highest quality in the next bucket down in the B zone. So that happens a lot. We're just now, like I just got done closing a $600,000 cash advance on an 18-month, and it's for a helicopter company. Owner
Wow.
had good credit, everything was there, but they just didn't have the financials yet. So once their financials are caught up, I'm going to get an SBA loan and pay that revenue loan off, and realize the discount that you can get off of that. They'll end up only paying about 17% on half of that money, and the rest will be rolled in and forgiven. And then they'll have an SBA loan at right around 4.89%. But they
Wow.
needed the cash now, but didn't have the paperwork to get it. So we work with clients like that to work around and get to know their issues, and do the best we can to provide them the services that we have offered to get them. But just so you know, we're always refining that process. We're always looking to get better, because it just all it does is improve all around efficiency, and it gives us a better service to our clients when it comes to what we can offer. Because we pretty much offer, when somebody says what we offer, it's everything. There's one or two things that we don't do. Vehicle wrappage, signage, and floor financing for car dealerships. Other than that, I can't think of one thing that we don't do. And we can always work around those as well and find other options for those people that don't qualify for those other loans. So, but yep.
Wow. Wow. So in other words, you can almost, operate almost in any industry, any business that's out there, and still be able to qualify for a loan here. So where a lot of times what we find is that certain restricted industries or high risk industries, with local banks or even the bigger banks, they immediately, judge the business, and although the business can have solid business credit, they'll turn them down basically based off of restrictions of the type of industry they're in, or either if they're in a high risk industry. Is that right?
That's absolutely correct. One of the biggest restrictions, or an example of two popular industries that are also restricted, and a lot of people don't know, is car sales. Not now. I'm not talking about service and body shops. I'm about car sales, automobile sales, and law offices. You know,
Hmm. Wow.
um, believe it or not, lawyers are hard to fund, because probably because they're the only ones that actually read the contracts. Sorry, little finance joke there. But yeah, those are very, very difficult to do. But now they're open. They're wide open now. We've had many products now that are open to those industries that weren't open 6 months ago.
Wow.
That's why things are always changing, and that's why we always want you guys to stay updated in the back office with our updated guidelines, because it's a living document. They do change. Our cheat sheets for our different programs, we do update them quite a bit.
Right on. Perfect. So one of the few things here is that a lot of times I get the question, when I submit a client over for funding, right? Well, obviously, you know that you submit a client for funding through Add Clients, right? And I'm just going to take a quick second here because I need to show those that are new on board here with us that do not know how to submit a client for funding. I won't take too much time on this, but you want to click on the Finance Blueprint, okay? By clicking on the go and Add Clients and then going to the Finance Blueprint, you're able to then enter your client's information in this easy to follow step. Drop down here, who do you want us to contact first, your client or the partner, right? Or yourself. Why would we want to put that there? Because there might be the instance where the client says, I have this happening, I have that happening. Just a little information that I want to share with the finance team before you call him or reach out to that client. And then of course, leave the click for Finance Blueprint Qualify and then add the client. It's that easy. All right. So again, you go into your Add Clients, Finance Blueprint only, fill in the information, hit submit, add client, and you're good to go. Okay. So another question that I get a lot is, and then we'll roll into processing, but client dashboard. Where do I know? How do I follow my client? How do I know what step they're in? So a lot of times, a lot of this information, this data, instead of having to call your finance person who's working on your file, you can simply go to client dashboard, hit view, and a lot of that information will show up here where you can see where your client is at in the game of obtaining funding. You can see the client files. You can go into the different finance stages here. I want to touch very briefly here on that, on processing. We have processors here. We have a ton of them. And the reason why we have them is because we want to streamline the process. We want you to be hands off. As soon as you bring your client in through Add Clients, you submit them over for finance, you get them over, you're checking on your client dashboard. We're doing the consultation. We're making the calls to the bank. We're rehashing with the bank, getting better terms, working the deal so that we can really truly bring this customer back as a repeat referral. Whenever they think of money, they think of you. We have the team that is going to process the deal. They're collect the stipulations, and then at that point in time, once we get to go, it's 911. Let's get them to the closing table. And many of you know this, that time kills deals, so we want to make sure that we can streamline the process as fast as we can. So, Craig, can we touch a little bit on processing? What is a processor? What are they there for? We have plenty of them that are working constantly around the clock to ensure that we can get these deals taken care of, submitted, and to the closing table.
Yes, that's a great point about working around the clock. Our processing team is outstanding, and they where they take over as example. We'll get a lead in. They get the lead in immediately, assign it to a finance officer, and we contact that person as soon as we can, but we say within 24 hours. Sometimes it's within an hour, sometimes it's the next morning, depending on when it comes in at the day. Keep in mind, out of the finance officers we have, each finance officer has about 100 to 150 active files. So without our processing department, we would be dead in the water. So what they do is they'll assign the file, and then the FO will contact the client or you as dictated, and then we go through getting to know the client, placing them, talking about programs, agree on a program, and then we email out the step list and or the application for that particular program. At that time, the FO will then CC you, the partner, so you will get an email, a CC email of what we're sending your client. Now, the one thing I will say on those emails, please be careful because this is a Zendesk email. So without you knowing it, whenever you reply, you're not replying to a person, you're replying to a ticket. So whoever has access to that ticket to include your client has access to read that email. So whether you hit reply or reply all, it's always going to be reply all. So I'm just letting you know that because I've had some partners use some choice words about their clients, and their clients could actually see that. And I'm like, oh no, please, I got to call you real quick. Don't. So just be careful. If you're going to reply, you can just call us instead. All right. So that's one way that you're updated. The second way is when you go down, you see on the screen that's there says view notes. Our processors will update the notes in there about what's going on with a file, like waiting on page 6 of the bank's requested it directly from the client, or underwriting has been trying to contact client for 48 hours with no luck. Please, handle it. That's where it's at. So you'll know where it's at. And also the financing stage, that's just a generic where it's at, whether it's waiting on information from client, or approval client accepts, or terms received reviewing with client. Those are just stages. Those are just to help you know, okay, where is the file at in a stage? Is it still in the beginning? Does the client still owe me docs? Or are we past that phase now and in review and underwriting and all of that? And then the details would be in the notes. The reason why we go to that much, and oh, by the way, the processors do work around the clock. We do have processors that actually work, even as a part-time status overnight. So we get a lot of those files get touched, in the middle of the night sometimes. And then obviously we're a full blown during the day. So we're constantly maintaining those files as best we can because the numbers are so high.
Yeah.
But that's basically how we do it. That's how the flow is, and we want to get those files as quickly in as we can, so the client knows, hey, this is the documents that we need. So partners are always asking, well, what kind of documents should we get up front? Well, it really all depends on the program. If it's an SBA program and it's going to be something like that, then you go ahead and start collecting them, but they're going to get the STIP list from us. So we're going to need things like last 2 years personal and corporate tax return, a personal financial statement, a debt schedule, a profit and loss and balance sheet, full financials. If it has anything to do with accounts receivables or payable, we're going to need those documents as well. Last 3 to 6 months bank statements on almost every one of those types, plus the application. And those things don't always come into us properly labeled in the right format at all times. It just doesn't happen, no matter how much we coach people or try to get partners to help out, or most clients aren't ready unless they just went through an SBA loan, have everything readily available. So they're going to have to go, get good at QuickBooks real quick, or be able to get to their accountant fast so we can get the documents that we need. But collecting those documents, once we receive them, also we have to review them, which processing does. We check for signatures, make sure the social's on there, the EIN number, make there's no blanks, make sure we all have the pages. And we get documents that says page 1 of 7, then we need all 7 pages. Little things like that. And not only that, but then we have to put them in a file that needs to be properly labeled, so they're converting those, PDF files into labeling them correctly for our lenders, because, our lenders and underwriters are just like teachers. Even if your paper doesn't have much substance to it, but it's neatly written in AMPA format the way the professor wants it, then you're going to get a better grade. Same thing with turning in documents for a loan. If it looks like it was done by a 3rd grader with a 3rd grader pencil, then they're asking for $500,000. It just makes people nervous when they don't have the proper paperwork or in the proper format. So our processors are advocates for that. We want to make sure that we put all that together for the client. So that's how important processing is. We also let the clients know that, hey, if you need me, contact me immediately, but you will be getting an email and or phone calls from our processing team. So keep a lookout for those as well. That's us. We're all on the same team. So we have that little speech with the client as well. So they're not saying, well, why am I talking to 3 different people? Well, that's because 3 different people are still trying to get that one thing from you. You know what I mean? So that's the answer to that question. But that's what our processing team does. And they're very, very good at what they do.
Right on. That's I second that. It's this is a process that we're tweaking constantly. It's all about streamlining this process. It's about getting the stipulations in. It's about getting these deals closed as fast as we can. The faster that we close these deals, the faster that we can get funded and put money back into your pocket. Again, very seamless. And of course, we want to make sure that your clients can get the funding that they need so that they can work on their projects as soon as possible. So, a few questions here that I got last week was, how do we deal with? Are there banks out there that are touching business owners with, maybe some tax liens or maybe some child support? Is that something that's out there? I know that more and more banks are starting to jump on, overlooking certain things. Their guidelines has kind of stretched out a little bit to ensure that although the business is is pretty good business, is making good revenue, but they do have a tax lien, or they maybe have a child support on their personal credit. Are there some banks that are really even touching this type of stuff, or what's your take on that?
Well, I mean, this is something that is ongoing, obviously. In today's day and age, 2019, with social media and the way the internet is, underwriting is taking on a lot more role. They can find out anything about almost anybody. Um,
Mhm.
and the more we spend time on the planet, the more that's just going to be. There's no way around it. But I don't want to spook people either, because I don't want you to add more questions to, we don't want to create any more barriers. But just for common knowledge, underwriters now will do a background check on the owner. And if there's any kind of a financial risk that's future, like I'll give you an example. I had a $2.2 million SBA loan get declined at the last minute because of a pending divorce.
Mm.
And a lot of people that wouldn't think about that. Like, why would that be a big deal? Well, we don't know what the judge is going to say on who's going to be the real owner of that business once they just started dividing up marital assets. That's
Wow.
number one. Number two, we know that a lot of other credit stuff happens with that when people go through a divorce and they're dividing up assets. So it makes a brand new, here's a loan of that size, be a lot more riskier to the lender. So that stuff like that happens. Criminal background checks, very important. Child support, that's another thing. Just so you know, the only power that's out there that has the ability to seize a business's bank account with no warning is the federal government. So if there's any kind of trouble with federal government, to include taxes, then that obviously has a big bearing on whether we're going to be able to fund as well. So certain tax liens, as long as they're under payment plans, and once they're under a payment plan and it's worked out with the IRS, then the only thing that would dictate if it would knock them out of the box or not would be the amount. Generally, the amount. Lenders do not like to see more than 75% of their loan being at risk in taxes. So if it's a
Wow.
$100,000 loan, they don't want to see more than 75,000 in tax liens, and vice versa. But that's just a general guideline. Each lender looks at it a little bit different. Just like BKs, Chapter Sevens, stay on for 10 years. But if it's 5 or 6 years past the discharge date and they've reestablished credit, then it opens up a lot more programs. Not all programs are open. Some are very, very stringent, like our UBF program. If you have it anywhere on your credit, you can't go through that program. But even for a term loan, revenue loan, any kind of, as long as there's reestablished credit, we can work with them. I was able to get a $300,000 loan done on somebody that had a discharge in 2015. And that was last year.
Mm.
So it was just over 3 years, or right around that time frame. We were still able to get that person that size of amount. So it really
Wow.
all depends. It really all depends on what kind of program we're looking at. So and that changes all the time as well. So those types of things we'll know right at the phone call and right at the initial contact.
Right on. Perfect. And then if we could touch very briefly here on the three C's again, and the reason why I want to bring this up is because some that weren't here last week, it's very simple in how you approach your clients. It's all about, you know, yes, you are selling business credit building, right? We call it the core, you call it whatever you call it in your business, and you want to definitely enroll your clients into building business credit so that they can establish trade lines, can establish business credit. But a lot of times, and we practice that here at Credit Suite, and that's why we have such a high success rate in traffic conversion. We're not approaching clients by asking them, do you want to build business credit not tied to your social? Well, half of them will say yes. The other thing, the other 50% will say, well, I don't know. I don't even know what that is, because 93% of business owners, almost 94% of business owners, do not know that that you can build business credit not tied to your social. This is the program that you sell. But a lot of times, the hook here is uh, you want to talk to them about financing. 9 out of 10 clients, or 9 out of 10 business owners need immediate funding right now. So if they qualify, you can get them in the program, you can get them enrolled or submitted over for funding. Funding gets them some money. Now, funding is always going to try to get them a little more so that they can circle around back here to you and get you. Now you can bring them on board for to sell them the business credit building program. And now you just got yourself the opportunity to get them funding, get paid on that, and also business credit building, and a repeat referral business will continue to draw from that client. But you know, you got to keep it simple. When you're talking to your clients, you're not talking about business credit building, you're talking about funding. And when you want to talk about funding, there's three questions that we ask. It's called the three C's. Craig, can you just touch on that very briefly and how we approach clients with that?
Yeah, three C's. That's an old school acronym. Credit, cash, or collateral. Basically, one of those, if not all three, then you're going to be a tier one. But one of those has to be prevalent for us to do any type of funding. So if you're cash rich and credit poor, then you're going to have the cash. We can work with that. If you're credit rich and cash poor, you got good credit. We can work with that. If you have collateral and you can show serviceability, and even sometimes that doesn't even be required, then we can do cash out refis on collateral. So it really all depends, on where the client is and their cycle of business. Majority of the businesses that you as partners will deal with are startups or less than 3 years old companies, and it's very, very difficult to sit and go, hey, yeah, everything you do is going to be non-PG. Well, it will be on vendors and stuff, but business credit is like a teenager. You got to co-sign for it a couple of times and get some comparable debt out there. And the stronger your business credit, the less you'll pay as a business owner in interest, because you're going to get much better terms and rates with a strong business credit profile, even if your personal credit is challenged. So it's very, very important, and that's our steadfast, because I see and talk to underwriters all day long. And the first thing we do is we look at the business credit, because we want to hang our hat on something. We want to see if they've got any comparable debt on there. How are they doing? Are they showing any kind of payment history? Or is it good? Is it bad? How are they ranked? How many employees do they have? What I mean by rank is they'll rank you in industry per region.
Hmm.
So there's a whole bunch of things that go into business credit, that other than just the paydex score or pay net, depending on what you're looking at. It's the overall profile that's built in there. And it's very hard for a company that goes, oh, hey, yeah, I started my business, getting an EIN number and filing for articles of corporation doesn't automatically qualify you for a loan. Okay,
Yep.
so there's certain things that have to be done in certain steps. And then some's going to be a lot more painful than others. Some will be a lot less painful. But as long as they understand that it's a goal and they're driving towards it, and it's not going to happen overnight. It's something it's just something that's steadfast. So a lot of things and a lot of questions that I'll get is that, as a business owner, sometimes I just don't have time to get to it. I'm all excited. I get to stage 3, and then I kind of get burned out because I'm too busy trying to launch my business. So that's generally what causes the most time, because starting a business and or running a business, as everybody knows, it's on this call, can take up a lot of your time. It's not a 9 to 5, and at 5 o'clock I just click it and I can erase my brain and it's over. Business owners don't have that luxury. We stress over things in the middle of the night, 5 o'clock in the morning, and 5 o'clock in the afternoon. You know what I mean? So we're always stressed
Yeah.
out, about what we're going to do, how we're going to grow it, how we're going to, how we're going to scale, how we're going to increase revenues. So that comes into play a lot as well. So business credit obviously is extremely, extremely important. We don't ever want to dilute that, but at the same time, you're going to come across clients that want funding now. And we
Yep.
need to let them know that, hey, there is funding platforms available for you, especially the UBF program. I can't stress that enough. I have heard it so many times when I've talked to every single time I talk to a business owner. When did you start your business? 5 months ago. What's your personal credit score? Well, when I first started it, I was in the 740s, but not anymore.
Right.
If I had a nickel for every time somebody said that to me, I wouldn't even, I just need to listen to them. I wouldn't even have to do anything else. I'd be rich. So it's important to try to get to these people before they get to that point to where they're utilizing all of their personal, credit and their personal means to launch a company and get it running, when they can right off the bat start off with just our UBF program and have the business credit start working for itself and get working capital that's basically off the books. It's only going to report to business. So if you can leverage your personal credit and you've got good enough credit in the beginning, that's a no-brainer. You have to do it, because if not, you're going to be in the low 600s, high 500s with no revenue yet, looking for a loan, and nobody wants to
Yeah.
be in that position. So
Yeah.
yeah.
Makes a lot of sense. That is super important, and that's why a lot of times if your client is not qualifying for loans right now, well, you have business credit building to fall back on. One of the questions that I love to hear from time to time is, so do I need to get my business up and running in order for me to enroll into your program? And the answer is no, absolutely not. And the reason why is because, okay, so now you feel you're in a high risk industry. You set your business up for failure by giving it I Sell Homes Realty Group, which is a high risk industry to start out with, and then you now have that name that tells the banks, listen, I do real estate, and now where you would have the opportunity with 200 lenders, now you got to narrow it down to only four. And now maybe 50% of those lenders are high risk, and the other two are just very, they only want tier one. Maybe that your client doesn't have that. So it's very important to enroll your client in. You have a program that can attend to any walk of life or any type of business that's out there, practically, and a program that you can structure them correctly right from the beginning, from a business address, from a virtual telephone number or a business telephone number, from not using a Gmail account to using a info at such and such company, to really truly fixing the credibility of the business. Credibility is huge when it comes down to becoming lendable strong. And if you can bring your client on, we'll make sure that we fix their credibility, get them in fine tune, so not only they can build business credit organically through the 7-step proven process, but at the same time get them the funding that they need in order for them to continue growing their business. Anything else you want to touch on, Craig, here before we open it up to Q&A?
Nope. That was a good one. You almost had me signing up.
All right,
That was a
all
good one.
right. Well, yeah, we'll break it down in monthly payments if you like, or one pay. No. Uh, I do want to share here with you a few of the telephone numbers that it's important here for you to have. Obviously, you can find that here on your page. Um, let me see here on your contact us. But Partner Success, 855-504-4122. That's a really awesome group. Do we need help with marketing? Hey, I just heard the partner training webinar. Where do I find these forms for or section for finance and marketing and all, and flyers and all that good stuff? Reach out to Partner Success. They're very good with that. Advising, 1-800-497-0499. That's your advising team. Not only do they advise for your business so that you can grow your business credit, but at the same time, that's the same group that's going to be working for your clients. Reach out to them with any questions you may have. Listen, I have a company that's doing this. They want to do this. Is that right? This is the state. This is their startup, or they've been in business for 20 years. Awesome team there. Jan has a really awesome team that's dedicated here to the success of business credit. And then, of course, finance. Let's connect with your finance team. Let's get some applications sent over. We're seeing the ones that are holding their own webinars, or excuse me, live seminars or joint ventures with other companies. Those are the ones that are getting paid. And I wish I was a partner here with this company, but I signed a non-compete form here, and I can't go and do my own thing. But I hope Ty's not listening to that. But anyways, again, the finance team, they are the ones that will drive the business. They're the ones that will continue to bring your clients on board, get them submitted, get them funded, and get you paid. And of course, that's 888-275-6780. And of course, billing. Any billing questions, 855-504-4120. So right now, what I like to do is I like to open it up with some questions here, because last week we had a lot of questions that was put out there, and we want to make sure that we answer anything and everything that we can. So let's see here. Ralph, welcome. Thank you for your question. Does a potential customer need to have an LLC or corp prior to signing up for UBF? Excuse me.
Oh, for UBF?
Yeah.
Yes, you will. You will have to. Now we can go ahead and get you qualified, if that, because we normally do that to provide the incentive. So because we really don't need the EIN number or the articles yet, just to see if they qualify, because we're just going to assume that there's a startup company with no revenue, and then we would run that credit through to see how it would qualify for, then come back with the approval. And it's like, hey, yeah, as soon as you file for a corporation, we can get you between 60 and 80,000, in 3 or 4 business credit cards right off the bat. But in order to receive obviously you have to have an LLC, S corp. You know, have to be incorporated somehow, some way with an EIN. So we don't do a lot of sole props. Sole props are very difficult to do, and they're a lot higher risk in all funding platforms. Some won't even do them, and the main reason why is because they're not protected by the corporate veil. If you got I just like the other day I talked with a guy who's been a roofer for like 6 years, and he's a sole prop. And I couldn't think of a more dangerous job that's not incorporated than being a roofer. He's on other people's properties. He's up, you know, he's licensed and bonded, but his company, if something goes wrong, he's going to be liable for personally for it. So he's not protected by the corporate veil, which, you know, a lot of lenders want to see in order to fund that. So, but especially for UBF, yes. In the beginning, to get them qualified, no. But before we can fund them and go through the finish up the process, they would have to be incorporated.
Perfect, perfect. Thank you for that. Another really good question, and this will be a two-part here for you and for me, Craig here. So when I sign up my client, is the fee they pay coverage business, business credit, and business finance also? So thank you, author, for that question, and welcome this week. So what I have here is your ad clients, right? So Finance Blueprint, if your client is ready for funding right now, right? They say I need 150 grand, I need $500,000, and you know what, I'm well established, or you know what, maybe I'll consider that if you can give me the funding so I can get into your program. You can still separately, submit this client over through Finance Business Blueprint only, and submit the application here so that we can get a hold of them and get them the funding that they need. A lot of times we'll run into that. I don't have the 4 or 5 grand that you want for your program. I think it's amazing that you have a program like that, but I just don't have the funds to lay out 4 or 5 grand. So what we do is we go into Add Client, Direct Funding, right, where it says Finance Blueprint Only. Put the information in there. Who do you want us to contact? Is it the client or yourself, the partner? And then leave the Finance Blueprint qualifier and then add client. Real simple. If they need, if they have the money, and you say you want to do a package deal for them, say, listen, I'll get you in the business credit building program. We're going to, assist you with a business coach. We're going to get you a finance officer. We're going to get you, corporate credit not tied to you personally. At that point in time, yes, you have the option of submitting it here and paying the fee to get them enrolled in that program. And it's that real easy to follow step here. Add client requires credit, okay? So 2 separate things, but with the business credit builder, you will automatically, get a finance officer to assist them in the funding, and that's by clicking on include Finance Blueprint qualifier. Okay, thanks for that question here.
Yeah, I want, Ken, if I can, I want to elaborate
Yes,
on that
please.
a little bit more, because I think I know where that person was going with that question. There, let's assume that it's flipped, right? You put somebody in as a BCB, and now they want funding, and they want to say, okay, well, I've already paid this much money. How much is for funding? When you're selling the BCB program, the Business Credit Builder program, you're also selling access to the finance department, meaning that they're going to get financial advice. We give, even when we talk to them as a direct funding clients, work from a consultative approach. We want to educate, and a lot of our clients love that because they want to know the whys. They don't want to know, hey, just fill this out and I'll let you know if you're approved, yes or no. They want to know the whys, and we go through great lengths to explain that and coach it to them. But when it comes to cost of financing, 90% of what we do in the finance, it doesn't cost the client any money, meaning that our commissions or anything that we would earn and commission splits with our partners like yourselves come from our lenders. We don't third party anything when it comes to on 90% of our stuff. Now, where that gets confusing is our UBF program. Our UBF program, it sounds like the back end of our BCB, except for the BCB program, these are non-PG vendor accounts, because that's the difference at a time when there's no credit existing. Net 30 is the only thing you can get, whether that's a non-PG, because that's it. So that's the difference between PG and non-PG. Now, where we really save them though is it reporting? Is it gonna be attached to my social? Is it gonna report to my personal credit? So, but that program is a completely separate program that has much higher results, and it's an actual service that we provide on the funding side. So there is a fee for that. It's a completely separate fee that they will pay for the UBF program that's above and beyond the BCB costs. Now I've had some conversations with clients where they're just like, well, that doesn't seem right. And then I have to explain to them in detail, this is what you bought and these are the services and the access and everything that came with that program. This particular program is leapfrogging you way, and it actually takes work, like a whole team of people to do to make sure it goes through to get the results that we're guaranteeing you we can get. And that comes with a fee because obviously they're not a nonprofit. So to answer that question more directly, generally there's no other, and well, the only reason why I say general is because the only other thing would be maybe a large commercial deal. Large commercial deals, we generally will do a third party asking for a point or two depending on the program. That way we can get commissions out to our partners. Because it's just a different animal when you come into commercial real estate purchases and investment properties. Other than that, everything else is paid for by the banks. There's no no upfront fees or anything for the clients. So that's, like I said, 90% of everything we do doesn't require any money from the client. So just want to make sure that was out there.
Perfect. Thank you for that. Yeah, so I got another one here. Hey, Edward, welcome. Thank you so much for this question. What is the process for submitting a client and what is the turnaround for approvals? Specifically, how quickly does the client and broker find out how much the client qualifies for?
We briefly talked about that in the beginning. When you enter a client, whether it's the client's going to be contacted to you, which you choose, we'll contact that client immediately or within 24 hours. We want to say immediately because sometimes it does happen that fast. It gets assigned to a finance officer. Finance officer gets it. He or she knows it's brand new, and they will contact that client within that business day. But we always tell everybody 24 hours. Now, funding times, it all depends on the program. If it's an SBA, it's going to be 4 to 6 weeks after we get all of the documents we need. So that's where it gets into 2 to 3 months because of all the documents. It all depends. I've funded $500,000 on a revenue loan in less than 72 hours of meeting the person on the phone. So it all depends how motivated the client is, how quickly we can get documents in and out. If there's any questions that may arise from the documents that are given to us, because we turn and we don't give up on a file with an initial no. I'm constantly, most of my day is talking with underwriters and getting the whys and what can we do and what else can we do? Can we lower it here? What if they have this? What if we get another cosigner? What if we collateralize something? We're always doing whatever we can. So to put a time frame on there is to actual funding. Now to get the approval, we generally get approvals. If it's a normal type of loan, from term loan all the way down to revenue loans to UBF, we'll have that in 24 to 48 hours once we get the app and whatever the documents we need. And then we call back up and go over the terms and the rates. If the client accepts, we order the contracts, get the contracts out, whether it's DocuSign, and that whole process starts. And then we generally fund right then and there. So we can determine rather quickly, but funding obviously sometimes can take a little bit depending on the actual funding program.
All right, perfect. Got another good question here from George. Welcome, George. Thank you for your question here. UBF, if your client had 680 score, but there is DTI is over 60 or 70%, can you still get approved?
Well, the only DTI we're calculating is the utilization on revolving. So the only time DTI comes into play is if you're buying a house or you're going for a term loan. I don't know if you guys noticed this before, but if you ever go for like a consumer term loan, I don't know, you log online and go to Best Egg or something, and everybody's used to applying for credit cards online where they tell you, well, how much is your annual income? And then people sit there and think a minute and they start adding stuff that doesn't even make sense. And they go, yeah, I make $110,000 a year. And then they get an $8,000 credit card. No questions, no ask. All right. But now the same scenario, you're going after a $50,000 term loan. Whatever you put down for your annual gross income or household income, you're going to have to prove. They're going to ask for W-2s or bank statements, or you have to prove that income. So it really depends. What was the original question again? Read that to me again. I'm sorry, it's blurring out here.
No worries. So what we have here is, so in other words, there's 680 score, and they're at 60 to 70%
Right,
DTI.
right,
Can they
right,
still get
right, right,
approved?
right, right. So we go off the utilization. So a
Mhm.
680. Now keep in mind on the UBF program, we'd like to see 680. I don't know how we got to 680. I guess I always say 685, but it's right around that. We
Uh-huh.
need that. That needs to be the score just for the credit department to bother reviewing it. Most of
Right.
the times we like to see 700 and above. I've seen
Right.
some 680s get approved, but our best results are 777 and over. But what really drives the UBF program is bank card history on the personal credit. Okay, the longer they've had trade lines reporting to the credit bureaus on the revolving bank cards, the higher the credit limit and the lower the utilization. We like to see 40 and below. That would be what we call a qualifying account. The more qualifying accounts you have, the more money we can get you. We like to see over 18 months time on file. We like to see 5,000 and up. So the longer they're on file and the higher the credit limits, the lower the utilization, the more money we can get. Where we come into a challenge is where we get a 750, and the highest credit card limit they have is a $500 Capital One card and a Macy's card for 200. We
Right.
just can't. It's almost impossible to do anything with that because there's no historical data for the banks to go off of in order to get the numbers that we need to get on that particular program. So it's not just the FICO score, it's FICO 8 driven. Department store credit cards, installment loans, mortgages, auto loans, all those stay in the peripheral unless they're negative. If they're negative, then obviously they can disqualify you. But if they're all, where they need to be, no missed payments, no derogatories, then what really drives it is the bank cards. So hopefully that answers your questions.
Perfect. Perfect. Thank you. All right, Ellen, welcome. Thank you again for your question. Hi, so what range of percent fee for UBC, Secured Business Credit, and what likely percentage interest on the cards?
On the UBF program, our cards come with 18 to 24 months of 0% interest rate for introductory period, 18 to 24 months, which is pretty doggone good. After that, they'll settle down to right around what the credit is. Most of them settle down between 9.5% and 12.5% APR, but still a lot better than a traditional consumer credit card. But the big catch is, and the big what we do is they get that long introductory period of free interest. That's the key thing. That and cashback rewards. So when they pay our fee, they're going to get a large percentage of that back in cashback rewards for their first purchase. When they actually pay our invoice when they get the card, it'll be the first payment experience that reports to business credit bureaus, and then they're on their way. The minimum payments 1% of the overall balance. So which helps them out quite a bit. And we also explain to them the power of a business credit card over a personal credit card. A $10,000 personal credit card is worth about $4,000. A $10,000 business credit card is worth $10,000 because a business credit card goes off of payment experiences and is not reflected or at all by utilization, as long as you don't miss a payment. Now, obviously, everybody knows that on the personal side, 80% of your FICO score is based on revolving credit debt. The higher your utilization, the lower your FICO score.
Perfect. Perfect. Now, William, welcome here. I see you got a question presented here. Not sure if you mean automation by the question you have, but I'll read it out. We work a lot of events. How can we get a pre-qualification indication so that the attendee can put down payments for the program they want to buy? So I'm thinking automation. Is that what you're asking? I'm not sure if correct. You reading it a different way than I am.
I'm assuming with payments and everything, he's talking about the BCB program. So they're probably figuring out, that's something, and maybe they do the landing page on their own website where people can just log in, hit the link, and fill out the FBQ right there for financing, or fill out the information for a BCB client. That's what I'm
Good point.
assuming the question is.
Yeah, if you can add a little more detail in that question, but yes, I mean if as far as automation is concerned, you can create landing pages and utilize our development team to help you and assist you in that for pre-qualification indicators. But if not, just let me know. That way I can. If that's not the question, feel free to give me a call and I'll be glad to help you out afterwards. But yeah, if it is automation and it comes down to business credit building, our business our partner success and biz dev team can assist you in getting that all worked out for you. All right. Um, All right, Edward, welcome. Will these loans credit cards report to personal credit?
No,
Okay.
that's the beauty of the whole program. The UBF program, even though we do have personal credit cards for enhancement, because they will get options on both, we don't ever want to deny a client the possibility of having more credit if he or she would like it. So based on our review, it'll be two different types of reviews, or two different um, uh, qualifications or approvals. One would be a combo. Let's say you have a combo of personal and business credit of upwards of $80,000 to $90,000. That most likely would be a split, like maybe 50 or 60 grand in business, and the rest would be personal cards. And then we would have below that would have business only 50 to 60,000. 99% of our clients, and especially the way we sell it, just want the business EIN only cards that only report to business bureaus and not your personal. And that's the basis and the beauty of the whole program, because I mean, who cares if you're personally guaranteeing anything? I would care more if it's going to be on my personal credit, because that's what affects me in my day-to-day life. There's no such as a personal guarantee report that somebody can pull on me to see how many things I'm personally guaranteeing. That report doesn't exist, and it doesn't affect any kind of financing. So my main concern would be is I don't want whatever I'm buying, whether it's a truck, a business credit card, a pizza oven for my pizzeria. I don't want that showing as a trade line on my personal credit, messing around with my DTI, my FICO score, and my utilization. And that's where we divorce the business owner from their business that way. And that's why that program is so popular. We do about 50 of them a week, to give you
Perfect.
an idea.
Right on. This is an easy one here for you. Can a startup get qualification for an SBA loan? Thanks, Ralph, for that question. Welcome again.
Yes, they can, but they have to walk on water. They definitely need to be qualified. They talk about a paper. A startup SBA most likely is going to need to be collateralized something. Whether even if there's not any room on equity on their home, they'll probably have to put up their home. Anything that's in their that's going to be in their business that maybe they already own. Let's say if it's something that requires distribution in trucks that they already own, that they have to purchase part of the SBA. But yes, and it also depends on the amount. But yes, startup SBAs. Now, keep in mind there are restrictions for industry, but startup SBAs we do, and they're most 90% of them, 99% of them are your 7A Express, because we're not going to go over 50 or to 100,000 on a startup unless it's purchasing property. Like I'm going to buy this, uh, you know, commercial property of this gigantic warehouse or manufacturing plant or something, then obviously that would be different, because that would be an asset that can be collateralized in the loan. But yes, we do start up SBAs to answer your question. Yep.
Perfect. We got Mark here with a really good question here as well. Hey, welcome, Mark. Do you have methods for liquidating the cards? Most cards only allow you to advance a small amount. So do we have such a program? Yeah, something like that?
We use a third party vendor for
Hmm.
that. It's called Plastic. PLASTIQ.com, and it's invoice based. And from what I understand, we've been using that or referring people to that company for a while, and I haven't heard of any kind of percentage of a card that can't be liquefied.
Hmm.
If it's on there and the invoice is less than the credit limit, they should be able to do the invoice. They do charge the merchant fee of 2.5% to liquidate, which is well worth it, because if you do the cash advance, then you're going to the cash advance will not fall underneath the introductory no interest introductory rate. 0% interest. So you'd be breaking that if you got a cash advance, which is why everybody likes to liquidate the cards. But no,
Got it.
I funded a real estate brand new investor, first house, needed the 25% because I had them at 75% LTV. We got them the card, invoiced it, put it in escrow. And liquidated the cards into that. Flipped the house, made a pretty good profit, paid the cards off, paid the lien off, and the rest was profit. We went on to the next flip.
Wow. Wow. Now, did you mention that's only up to 75% LTV on liquidating the cards, or that company does 100% LTV?
No, but the 75% LTV was the real estate. That
Got
was
it.
the real estate loan. That was the
Yes, got
investor
it.
loan. But to come up with that bridge loan, that other 25%, not everybody has, for a
Hmm.
$100,000 house, who's got 25 grand laying around,
Right,
and
right,
if you do, then let's go get some more. Let's leverage that money and buy a bigger house.
right,
Most
right.
people don't have that cash hanging out. So, so that's one of the biggest hurdles that they don't tell you about on those 3 a.m. infomercials, is how you overcome that investment company and try to get 100% financing,
Got it.
especially if you don't have a 7+ FICO score.
Makes
So,
sense. All right. Well, Ralph, thanks for the your question here. Does time in business and business income make any difference in the amount of approval for UBF?
the only thing that it would affect would be time in business. Generally, with 2+ years time in business, we get a 15 to 20% increase in the amount we can get for a business. There's no proof. Like, you don't even need a bank account, and you don't even need to be generating revenues, as long as the articles of corporation are in good standing. Generally, 90% of us are, they'd be, less than 2 years old startup. But if they, let's say, some people, we come across them more than not, be honest with you, they'll have I have a business that I started 3 years ago, and I got all hyped up, but then I never did anything with it. So I tell them to call up the Secretary of State, go ahead and pay your last 2 years annual fees, get that thing active. We got 2 years now on the articles of corporation, and we could get you 15 to 20%, or 10 to 15% more higher approval on bank cards on the UBF program. But no financials whatsoever, no banks, no nothing.
Perfect. Alan, with another question here. Great. And approximately what range of percent fee for the UBC? The lower the 0% interest on the cards is great. Thank you.
Was there a question there?
It says in approximately what range of percent fee for the UBC?
For a UBF program?
Yeah, UBF, but
Yeah,
unsecured.
the unsecured program, we charge 9.9% success fee rate.
Got it.
So we invoice the client. So let's say the first card, just to keep that simple, is a $10,000 Chase card. We would bill that card one time, a $990 fee.
Got it. Perfect. Perfect. And all right, so William clarified his question here. We go to events and do sales and funding support for our clients. Our clients' event attendees have an indication of their pre-qualification before waiting 24, 48 hours. So I'm assuming you're selling stuff on the spot. So let's see here. They want them to buy on the spot, and if they have a chance to get funds, they will put a deposit for their program, not BCB. This would be a funding client. So I'm assuming he's selling a program or something to that effect and needs funding for his clients. So he wants to know if there's some sort of pre-qualification or pre-qualifier program that we have to get him a client, I guess, maybe through a soft pull or some sort of system that interacts with ours
Right.
to get them pre-qualified.
Right. I would definitely go to development for that. And what they'll do is they'll create you a link that you can use and email out to your clients. And they can do it on their phone. They can do it on any multimedia, laptop, whatever. And they just click on the link, and it'll look exactly like what we showed you here when it comes to filling out the information: time and business, address, industry, what corporation type are you, annual monthly gross revenues. Those are all the types of questions that pre-qualify you into a program. Now, if you qualify for a specific program, I'll give you an example. On our FBQ, our funding qualifier, if you state that you have $10,000 a month or more in monthly revenues that are coming in, then it's going to say you're qualified for a revenue loan. Now, that revenue loan might only be $7,500, especially if you're a brand new company and or newer company and your credit's around 600. That's about what you're going to get. So it's just it really depends on, I'd have to get more information on what you're trying to do. But as far as qualifications, we have a link that you can do, and it'll automatically load them into our system and give them and email them back the qualifier, if you will, to let them know with a little, hey, congratulations, you may qualify for this. You may
Yep.
qualify for AR. You may qualify for this. And it has all kinds of questions. Do you have a 401k? Do you have
Yep.
all those types of funding questions that might be in there that give us some kind of answers to the questions on the programs. We know that we can get people money, especially if it's startup.
Right on.
So, but yeah, that would be with development. We need to get that partner over to development.
Yeah, so that no, if you can call out here to your partner success team, they'll get you ask a few more questions. That way they can direct you in the right path here. But reach out 855-504-4122. Again, that number is 855-504-4122. Thanks, William. We got we're coming here to an end here, so I'm going to wrap it up with some questions, but I still have a few that I got to answer. Independent truck with 12 months in business. What type of loans can they qualify with a 650 credit score?
Owner operators are tough to get if they're over the road. So if they're a one man truck with a sleeper on the back and they go cross state lines, it's very difficult to qualify for that person. Generally, we only start at fleets, and we consider a fleet 5 or more trucks, and they're in a brokerage. But to get an individual truck like that, it'll really go. It'll Most of that will belong on personal credit because we're kind of stuck in that realm on that particular, especially with a year time in business. Now, if he's on the road a lot and makes some really good money, and he wants to trade something in, or if he's looking, or he or she is looking to add a secondary truck, and they have a driver, then we can look at that depending on what the revenues are.
10-4. 10-4. All right, and then as far as wrapping it up here, we have let's see here, Mark, you charge 9.9 and we get 2 to 3. Let's see here. Bear
Two
with
and
me
a
one
half,
second.
2.5 points.
We
It's
charge
just
2 or 3% of that, but I heard that we can go up to 12.9, making our commission higher. Correct?
That is correct. You just need to make sure that we know that before we sell it. So if you
Mm-hmm.
know that person is UBF, that's why we have either contact you first, or in the
Mm-hmm.
synopsis and comment section on the FBQ that you would fill out or have your client fill out. Hopefully you guys are the ones filling them out so they don't think it's an application. And when you fill that out in the comments, you can put down this person's interested in the UBF program. Explain the program to the client, and he or she is I sold a 12.9 because that's as high as we go. If you do the 12.9, now we know. So when we're talking to the client, you've already mentioned it. So when we mention it, they're all for it, and then that'll be your bump in commission once we fund.
Perfect. Perfect. And then
But just
here
so
we
everybody
have.
knows, we default at 9.9%. So if we don't hear any different, we default at 9.9% because we always want to stay underneath our competitors. Most of our competitors are between 11 and 13%.
Perfect. Perfect. All right. Does the UBF program have industry restrictions?
No.
Okay. Okay. Perfect. So I'm going to wrap it up with one more question here, coming from Robert. I received UBF funding through Credit Suite as a sole prop last year. I had strong credit and high credit limits on my revolving credit cards, 25K. I incorporated after receiving funding. So sole props can get UBF funding if the situation is right. Has that changed considering you mentioned that you must be incorporated for UBF?
Yes, it has changed. That was a change that was about 3 months ago or so. I don't know the exact date, but yes, they want you to be incorporated on a sole prop. Um, if sometimes if you show a Schedule C, but it limits about half the banks we go to, and that's why the program has changed because we've been coming back with a really good credit and giving them approvals based on them having articles, an LLC or an S corp, but we got a lot lower results. So we had to literally change the program to make sure that you get articles now, because with the minimum that we would ever want to do would be 25,000, because anything less than that's really not worth our time, because that's how much time and effort it takes to get that program done. But to answer your question about the sole prop, yes, that is a newer change.
Awesome, awesome. So that is a wrap here for our 2-week how to provide your clients business credit lines and loans like a boss. So excited that you guys joined us here. Thank you so much, Craig. You're a wealth of knowledge, man. And if I had your brains, I can get rid of mine. But hey, listen, if you
Thanks,
have
brother.
any questions, feel free to give us a call at 877-600-2487. That's our account manager team. Our partner success is 855-504-4122. Our advising team, 800-497-0499. And our finance team, 888-275-6780. Thank you so much again for hanging out with us. Truly appreciate the time and opportunity you've given us, and look forward here to next week. We'll bring some guests here on board. That way, you know what? You've been working with some of these folks, but you want to hear directly from them. You want to know what's happening. You want to get it going here, and we want to make sure that we can address any questions that you have. So stay tuned for next week. We'll be sending out some emails. That way we can maybe bring somebody, another special guest like our good man Greg here. Thank you so
There's
much again.
nobody more special than me.
No, not at all. No, you're right. You're absolutely right.
All right, good hunting out there, guys. Good luck.
All right. Thank you. Bye.
I don't know.